Well, hello everyone, I'm Dr. Stock and this video is for entertainment purposes only. Today I want to talk about some of the opportunities that we have amidst this sell-off, and we also have some upgraded analyst ratings to take a look at across these three different stocks that I have for you. I can say that I've covered two of them before, and one of them is brand new. I don't know that it's surprising or unsurprising. I guess in some ways I find it a little bit surprising, and I can't wait to share this with you, and I'm going to try and keep this short and right around that 10-minute mark for everybody. So in the meantime, let's just get ready to rock. Alright, welcome back. If you guys like these videos, go ahead and cover up your eyeballs like this and mash around until you find the like button. There's also a subscribe button nearby, maybe by happenstance, so hit it. And also there's a notification bell that you can hit if you'd like to see anytime more of these videos come out. Those are nice, awesome ways to support the channel. Watching the video all the way through also helps the ranking and helps more of these videos come out to you guys. And the more support I have, the more support that I can return to you. If you want to check out some of those other ways, they are down in the description. My Patreon, if you want more of my content, my dividend portfolio, growth portfolio, my new crypto portfolio. It's a little guy, but he's growing quickly. All that stuff is over at the Patreon, plus my private Discord with my community that I have of passionate investors that are just really looking for more financial opportunities. And I gotta say, they're an incredible group, and I'd love to have you part of it if that sounds like something you'd like. Moo and Weeble, sign up, deposit your cash, get your free stocks. Those referral links are down in the description as well. I get free stocks for the referral, so thank you for any support that you show. I really appreciate it. With that said, let's get on to the stocks. Alright, so the chart that we're looking at here is for SOFI, and you can see it's had quite a time on the market ever since it came out and ran up to almost $30 per share, and then later on looks like it peaks at about $25 per share, and it's sort of had this downward trend ever since. And what we're kind of waiting on, and you can see there's a lot of anticipation in here with these trading volumes that we have, that people are trying to find out where exactly that price should sit, and we're sort of waiting for that banking charter news to come through. When is it going to happen? It's something that we anticipate to happen possibly within the rest of 2021, possibly looking into 2022. So whenever we get that sort of update information on SOFI, I think that it's going to make this go astronomically high compared to where it's at right now. And one of the news things that we have right now on it is we have a new analyst estimate at about $20 per share. As a matter of fact, here we'll go over to tip ranks. And on tip ranks, you can see that it's SOFI Technologies that we're looking at, and ticker symbol on this one is SOFI. And then what we have for the average analyst estimate right now is $24.38 per share, representing almost a 70% upside from where we currently sit. And if we scroll down here to Mizuho Securities, recently we get a $28 buy rating on this, and that was initiated, here we'll zoom out a little bit more, that was initiated yesterday, 93% upside, and I was thinking it was $20. I forgot this one's $28 per share. I was actually thinking of Lion Electric Vehicles, so LEV, I believe they got the $20 price target. So I know it's not featured in this video, but if you guys want to go check that out, you can. That's one that they already have products out, and they're also believed to have more demand going for them, so why not check them out, right? Back to SOFI. So for SOFI Technologies that we're looking at here, we have Mizuho Securities at 93% upside, Credit Suisse 1650, still capturing yourself about a 13, almost 14% upside from its current price. If we look up here, that current price is around $14.50, and looking at the lowest price that we have, seeing that sort of upside, that's a modest gain. Now mind you, we don't necessarily want to sit there, and I think as we have more analyst estimates come out, we're going to find a lot more bulls coming out of the pen to make their case and initiate coverage on SOFI, especially in light of the banking charter. If they do get that banking charter approved, I think that we're going to see much higher prices than we currently sit at right now, and it is one of those risky plays. It is sort of a long shot. You know, they have their own headwinds, so those are things that you have to be careful of. That's why the price does hang around as low as it does, because we do have some uncertainty and doubt around the performance of it. However, it's one that can be seen as having some really decent upside potential from where it currently sits over the next 6 to 12 months. So moving on from there, I always want to spell the word Apple rather than type in the ticker for Apple. There we go, AAPL. So Apple stock, I've not covered this one on the channel before. I may have mentioned it in passing, but look at this chart. We had a nice little fuddy time with that ruling against Apple from Epic Games about their App Store, and that brought it right back down. Look at these lows that we have. We have a nice, slow, steady trend line going on across these recent lows for Apple. There you go, get my drawing tools out. Come on, diagonal line. So even off the lows, we still have an upward slope, which is a good thing. Plus, we're sitting on the 50-day moving average right here, which is also a good line of support that we have. So we have that support to catch. We have this trend line down here, also has support to catch. And this is something that we can bounce off of in the near term. So for Apple, the nice thing about Apple is that the risks that are inherent in the company are much smaller because it is a much lower beta stock. As a matter of fact, ARK Invest used to put money into Apple just so that they could use it by selling those shares and turn it into cash. It was one of those nice ways, since they can't hold cash directly in their ETFs. That was one of the strategies that they have. So for Apple, you lose some of that risk that you might have with something like SoFi, which is a much smaller company that's just trying to get started. We're talking about a company that one of the analysts came out just recently and said that they're expecting a $3 trillion market cap in the next 6 to 12 months for Apple. So if we go over to tip ranks and look at what I have here for Apple, the most recent analyst estimates that we got, both of them yesterday, $185 coming from Dan Ives from Wedbush, and he is very well ranked. I think he's in the top 50 here. We can take a look at this. He's very well ranked, has a very strong success rate, and also very, very strong rate of return. So out of like over 15,000 analysts, Dan Ives comes in very well ranked. Here we go. He is okay, he's 30th out of 7,641 analysts on tip ranks and 41 out of 15,783 overall experts with a 76% success rate. So he's right 3/4 of the time and an average rate of return of over 36%. So this guy really tends to know what he's talking about here. So when we look at this, that's not just anybody. Laura Martin, also very highly qualified. Check that out, 62% success rate, astounding. Over almost 26% average rate of return. So this lady here, Laura, also very, very highly qualified and very, very on top of her game, we'll say, putting out 170, 185. So they are both are seeing some significant upside. Even if we look at that average analyst estimate, for a company like Apple to be as big as they are, to show that much growth is just incredible. To watch that continue to take place. So right now, just from the average analyst estimate that we have, out of the 17 buys and 6 holds, there's still about a 13% upside. And so while that's not enormous like we saw with almost 70% from SoFi, it's still incredible because we have such a solid company that's after these sort of gains with this sort of price target. So for big companies like this to see that much of an increase is pretty incredible. So that one I definitely like for that reason. So moving on from there, onto my friend Draftkings. There we go. Alright, so the final stock that I have for you is Draftkings, and Draftkings recently received some higher price targets from what it had before, and that's a good thing. The NFL strength that we have with the online sports betting, also the NFT market that they have going on gets mentioned, and also from their Simple Bet, the GNOG acquisition. Like, there's just a lot of positives going for Draftkings and really establishing themselves and taking a foothold in the online sports betting arena. And the nice thing is we get these upgraded analyst estimates while we watch their stocks sell off. So the estimates go up and more bullish, and yet the market says we're going to sell this thing off. So maybe this is a little bit of profit taking, people setting up for tax season. Maybe it's that we hit this area of resistance up here, and so now people are making sort of like maybe a small range play out of it, letting it pull back maybe to $56 per share, which I think would be an incredible opportunity moving forward. And so when we come here and we look at Draftkings, we have 15 ratings, 11 are buys, 4 are holds, and 71.86 is the average analyst estimate with a 20% upside. And so this is, again, not as huge as SoFi, but I don't think that there's the same risk for Draftkings as we have for SoFi. So even though we're not risking as much, I think that Draftkings already caught traction earlier on. Right here's one of the analyst upgrades that we have coming out from Craig Hallam, 5-star analyst. 75% success rate with a 63% rate of return. Woo! All right, nice job, Ryan Sigdahl. That's pretty incredible. You know, he probably has a lot of people following him for that sort of success rate, and hopefully he continues to be very successful over time. So going back over here, if you check it out, around $62 or $64, we have a little bit of resistance. Matter of fact, if I zoom out more, we can go back here and see more of that resistance that we have. So across this peak that we have right here, we peak at around $64. This peak over here caps out about $64, and so when we come over here, it might not be all that surprising that we hit about $64 before tumbling back down again. Plus, today was not the greatest day in the markets, and so we get some weakness in the stock price. But for people who are long-term investors in Draftkings, I think that that's going to pay back very handsomely in the very near future. Just through the NFL season, Q3, Q4, I think those results, are even total year 2021, I think is going to come out to be very nice for Draftkings. I think we're going to see a lot of really positive price action coming out of Draftkings over the next 2 quarters. I don't think it's going to take the next 12 months. So let me summarize. SoFi, very low price right now. Lots of uncertainty going along with the stock. When are they going to get the bank charter? If they do, or when they do get that bank charter, it's going to be a huge day for them. And I think it's going to take off a lot of that downward pressure that we saw. And I think the volume is also going to be there to support it when that comes through. And it should be something that also increases the revenue in a huge way, because then they can do their own underwriting for their loans, and they can also, I think they can hold money in their accounts. There's just things that they can do with the banking charter that they can't do without it, and they can also do things more in-house rather than hiring out third parties, which translates very well into their bottom line, even if it doesn't necessarily hit their top line directly for that part of it. So SoFi, I think there's incredible upside there to be had. I don't know if we hit the $28 over the next 12 months, but hitting $20, could be something very reasonable, which is still pretty close to like a 40% upside from where we currently are at. Thinking about Apple going up from under $150 a share, when we know that it's capable of it and has a little bit to work through with that Epic Games thing, and losing some of that high margin area that they were at with that 30% cut of in-app purchases, possibly going poof. I'm sure that that's something that if they can appeal, that they will appeal, and they're going to vehemently protect that sort of margin, or that sort of entitlement to those sort of fees. I don't think that Apple's going to give up without a fight. They are a cash cow for a reason. They really know their stuff when it comes to business, and they also have a lot of ability to navigate through all that legal stuff, and I'm sure that they'll also innovate to make sure that they keep growing as a business, because that just seems to be something that Apple does, and the next 6 to 12 months could be very exciting for them. And even though we don't catch the biggest of upsides, the fact that it's Apple, which takes out a lot of the risk because of the performance that they've put in, and well, we can at least count on less downside risk, but then we also capture less upside. So those are just things to think through. And then Draftkings, I think Draftkings also, if we're going to pull back to that 56 level, that we get some really attractive upside potential from where we currently sit. And if September's a sell-off kind of month, then we want to make sure that we have our cash on the side ready to go to take advantage of some opportunities. Not that any of this is financial advice, because it's all my own personal thoughts and reflections, and this is for entertainment purposes only. So thank you guys for coming by. I really appreciate it. If you watched through this far, your attention is greatly appreciated there, and so is your support. That like button, if you haven't hit it, please do so. Subscribe and notification bell. Check out those links down in the description for the Patreon, Moo Weeble. I would absolutely love to have you be part of my community. Get yourself some free stocks, get me some free stocks. Those are all wonderful ways to support this channel. And it's been incredible, and I look forward to making more videos for you guys. So I'm Dr. Stock. Thanks for rocking with me. Now go get that money.